Welcome to Make Your Money Matter. I'm your host, Brad Barrett. I'm also a managing director and partner here at One Capital Management. Today on the show, we're going to talk about artificial intelligence. You know it as AI. It's been in the news very much so lately, and I want to talk about it in context with your overall investments and your overall investment portfolio, how it relates to your retirement planning, and how this all plays into your financial world. But before we get started, make sure to smash that subscribe button, hit the notification bell so you don't miss a single episode. All right, let's get into it. So I would argue that probably the hottest topic over the past couple months has really been artificial intelligence. Now, to bring a little context to that statement here, the industry buzz phrase right now for top players in the equity world is something called the Magnificent Seven, which includes Meta, which is formerly Facebook, Alphabet, formerly Google, Amazon, Apple. It adds in there Microsoft, Tesla, and NVIDIA. And the enthusiasm for these companies is so high, and I'm bringing this up for a reason, that they currently make up 28% of the entire S&P 500 value. Now, fun fact, the index, the S&P 500, actually has 503 stocks. So you can take that to your next family dinner and have some fun with it. Those same 7 companies that I mentioned are responsible for 45% of the NASDAQ. Now, in anticipation of the likely question for any clients or anyone working with One Capital Management right now, we do own 6 of those 7 companies, though we're not close to as saturated as those are. And we're currently, by the way, we don't own Tesla, and this is just our opinion right now because simply it's just the expansive valuation of 58 times next year's expected earnings is just too rich for our blood. And I digress back to AI for a second because that's what I want to focus on today. I'm bringing this up for a reason because it's no coincidence that if you look at it, that AI, artificial intelligence, in our minds has been topical, the news, because nearly all of those companies I just mentioned, the Magnificent Seven, are considered leaders in generative AI, and others have actually taken note as well. Let me bring this all together here for you. To grasp the fixation with and the fervor over AI, you have to realize something. The number of companies who mention this technology, AI, developing it or using it in their public earnings reports just hit an all-time high with 110 companies mentioning it in their earnings calls with investors last quarter. If this need for companies to be associated with the hottest technology sounds familiar, there's likely a reason. Think back 20 years ago. The Atlantic, there's a man named Joe Pinsker. He noted in a 2001 study from the University of Purdue that analyzed outcomes of 95 companies that had added the .com, .net, or internet to their names during the .com bubble. This is the similarity I'm trying to make between the fervor over AI right now. And they discovered, on average, during 2001, the company's stock values increased 74% over the period of time from the 5 days before the name change announcement to the 5 days afterwards. And Pinsker notes that a more striking quote unquote, this effect was spread across all the firms studied, even those that didn't do business on the internet, end quote. This caused the authors to conclude that the market's behavior indicated a mania on part of the investors. And I'm bringing this up because I really want everyone just to pause for a second and understand what's being fed to us. I'm not saying there wasn't right or wrong of what's going on in the .com bubble or right or wrong what's going on with AI right now, but put it in perspective. I mean, one question that we got, asked earlier this week, which is actually what prompted the writing of this show today you're watching, is are we in an AI bubble given what we've seen over the past couple months, particularly with like NVIDIA, for example, and some of these stocks? It just ballooned, right? And if so, let's say, for example, let's play the if card. If we are in a bubble, it's likely in its infancy, frankly. And I say that with an if, right? Because at the .com peak, going back to then, technology stocks had risen 119% over a 12-month period. This year, the technology stocks are up 43%. This is, by the way, after last year's plunge, something that didn't happen before the .com. So just to bring some relevance there, and the tech sector currently is now trading at 26 times forward earnings, which far below the .com bubble of almost double that. So I want to debunk this whole bubble right now because no one really knows, but we can look back to our last bubble around this and take some similarities. And I also say if you look at the stats there with these two main ones between this current AI and what's going on with .com, again, 20 or some odd years ago, bubble or no bubble though, things could change quickly, frankly, with a rate hike from the Fed. I mean, regardless, it's unlikely to end, in the giant pop of like the bubbles past, mostly because the companies in today's markets are equipped with much stronger fundamentals than they were 20 plus years ago. And many of the early coveted, by the way, internet companies in the 90s, for example, had insanely high valuations and frankly, unrealistic earnings expectations. Friends, with all that said, the technical data I just threw at you, what I want to share about AI as a whole, and we're going to probably have multiple conversations on this subject matter, but here's what I want to share for anyone out there. AI is not going anywhere. Artificial intelligence has been here for a while, and it's become way more ramped up as of recent, which is why I'm talking about it, and will no doubt, by the way, be a game changer across many industries. But it's in its infancy right now. Even if we're in a bubble, it's also in its infancy. But the actual technology itself, still very young. Understand that. Let that sink in for a second, because we've seen it around. It's been around for a while. You can read about many reports on it, but again, still in its infancy. And throughout history, if you look at it, emerging technologies and the stocks associated with them go through lots of ups and downs. Okay, so before you just leave that barbecue you might be at or talking with your friend this weekend, right? And someone's killing it on one of those stocks last month, and you want to go and put your money there. Know you're in for likely a wild ride. And I'm not sharing that to do it or not to do it at all. I'm just sharing context here, as I like to do every week here on our show. And to that point, by the way, slews of new companies emerge vying for this kind of investment and bringing it up with even more opportunities. And we've been seeing this in the past couple months. Many companies have come around again, adding just the words artificial intelligence to their earnings reports. And this just happened last quarter. So we're seeing this come up as, basically a value grab, if you will. It's what they're doing. So don't get, slighted by that. And we saw, their report in 2001 that valuations grew simply by adding .com or internet to their names. We're seeing that right now with AI. So again, bubble or no bubble, or if you're looking to invest in it or not, understand this, things can change pretty frequently, but know this, it's still in its infancy. I want to share that again here today. It's just one of those things we're going to talk about a lot because it still, needs to grow and needs to be seen how it's going to play out. And I'll share this as a money manager here, as an investment manager. For now, on One Capital Management, we're focused on the practical implications of AI and how it might affect the economy. And I would argue and share that many of you looking out there as investors, you should look at it that way too. Obviously, there's different ways to do this, but that's how we're looking at it. And again, as investors from all of us, we're buying companies that are established in that field or in that sector or industry. And I alluded to that a little earlier by owning nearly all of that magnificent seven, but also the companies that provide things like infrastructure and computing power to those who are developing the potential AI engines. And I want to share that simply to say that there's multiple ways to invest in any sort of subject matter, right? In this particular case, artificial intelligence, you can invest in the companies themselves, right? You can invest in the startups of them. You can invest in the infrastructure. You can play on the computing power of them. You can do it in various different ways. So, manage your risk, if you will, if you are going to get into AI. So I'm saying that simply to just know and understand that there's multiple ways to do that if you're looking to have exposure to that area of the market. And what I really wanted to share here on the show about artificial intelligence and was answering a question that came up again this week and why I wanted to write about AI. Although it's come down to a little bit of the news sources, it became a buzzword, for a couple months there, still kind of is. And I just want to share that from an investment manager from a firm that's overseeing nearly $5 billion in assets. We have exposure there because we also know that there's practical uses of it, the implications of AI ultimately, and how it will affect the economy long term. But again, I want to share, we're still in the infancy stages, understanding, that how you look at things and how it relates to your investments and your overall risk tolerance, that all matters. It's, just like a subject of AI and how that would play into it. And I'll end on this and, put a bow on this by saying this is a long money manager. As for AI for us and the mania that goes around it, we want to be like the dry goods store back in the 1850s during the gold rush, like in San Francisco area. We don't want to, we don't all want us to be chasing the gold itself, but supplying those who come looking to make their fortunes. And so if you understand that, you can get into valuable companies. You can get into circumstantial areas that make sense, the peripheral, if you will, in order to offset your risk and that you might be taking directly by investing maybe in the startup or of that industry or sector, right? So, just a little high level on AI, looking at some of the questions around, what's been going on, the bubble, the news sources. And I hope you do like that. If you did, make sure to subscribe to our channel so you don't miss a single episode. And always remember to make your money matter.